Now we are live with Media and Games Invest, who last week published a report for the third quarter of 2023. CEO Remco Westermann, I have here with me in the digital studio. Welcome.
Thanks, Michael. Nice to be here.
It's good to have you here. It's been a while since you've been at the digital studio, and it's the first time that I have the pleasure of interviewing you. So I thought to new viewers, could you begin by introducing yourself and giving us the elevator pitch for Media and Games Invest?
Yeah, I'm Remco, the CEO of Media and Games Invest. Started the company 11 years ago, and have a whole background of building companies, running companies. Had a listed company before. And yeah, I enjoy very much what we're doing here. We started as a games company, and then we added the advertising part. And from that, we have really been growing and market leader in this advertising space. And that's a lot of fun. Happy to be here and to go a bit more in detail.
Interesting that you started with games, and now, as you said yourself just now, that you are market leader in in-app advertisements. I thought you could elaborate a little bit on the journey that has taken you there.
Yeah, as I said, we started with gaming. Gaming is a very attractive business, very nice business, profitable business, but has one big challenge, and that is game launches. And to grow, you need to game development, you need to do game launches, and that's super hit driven. And at a certain point, we said we're basically too small to take those big risks. You need to have a huge portfolio. You need to develop like more than 10 games per year over a 3-year development cycle. So you need to talk about really big budgets. And even then, we see a lot of companies in the market not succeeding. Where, let's say, the second challenge in gaming is in making money with the ads that are in the games. That's becoming more and more important, but also getting users into the games. And then we talk about advertising. Looking into the market, there's many parties that offer parts of that. We were not happy with those. And we said, why don't we build an advertising company that's ideal for game company? So it started. That's 4 or 5 years ago. And if I now look where we are, let's say it was meant to support our gaming business, but it has now become the biggest part of our revenues. So over 70% of our revenues is the advertising part. Close to 80% actually. And yeah, it has been developing very well, very nicely, growing fast. And we are now in running a digital advertising platform where we connect advertisers and publishers and see that the publisher gets the best money for his ads, where the advertiser gets the best targeting for the ads. And that is something that we do with data. So we enrich a lot with data because that enables to look for the right users. So that's fun. On the data side, the gaming plays a big part, also for testing our advertising products. But we also have a lot of SDKs, for example, in other apps. So by that, we have a nice market position built up. We are very strong on in-app. We are market leader there in the US now. We're within the top 5 in Europe. And also for CTV, connected TV, we're doing very well. And on the data side, we have really invested a lot. The market is changing, identifiers are disappearing. So we have done a lot with data, especially contextual data, to be ready for the new normal on the advertising side.
Interesting, and I thought I'd ask you the following question then in terms of your advertisement. Has the results of the shifted focus towards advertising sort of exceeded your expectation, or how does it look?
Yeah, it has. We really have shown very strong growth in the last years. We had a 38% organic growth in 21. And in 22, when, let's say, the market started to become more difficult, we still did 18% organic growth. So we really have seen very strong growth, mostly driven by the advertising part. There is a big demand for what we're doing. And that's the potential of the company has by that increased a lot. And gaming is still important, but the growth really comes from the advertising part. But I guess we're talking about the current market in a minute. That's maybe to say some words about that.
Yeah, let's head to the report then. When it comes to growth, you mentioned 2021 and 2022's growth figures, and they were in the double digits. This quarter, the organic growth amounted to 1%. Could you talk a little bit about what is behind this development?
Yeah, it has to do with the macroeconomy, and as a result of that, the advertising market. When things got more difficult, when there was more uncertainty in the market, the first thing that companies do is cutting their marketing budgets because you can do it fast and it's substantial. Then after they start laying off people, they increase prices, all those things. But at a certain point, that's, let's say, cutting budgets, of course, has a negative effect on the market. So normally the advertising market is growing. It's also projected to further grow. But at the moment, we have just to do with lower budgets. Lower budget also means, because we're working with bidding systems, and it's like with the stock market, it also means that you have lower prices. And we're talking, for example, in Q3, based on analyst reports, about 20 to 30% lower CPM, so prices per ads, for the ads than we had a year ago. And that's something you need to compensate. So even if 1% looks very low, it means that we need to go from, let's say, do a plus 25% on the volume, and that means that we have to add new customers to really come to the 1%. Because otherwise it would have been a minus 25 or minus 30% even.
You mentioned the CPM there, and I noted a question from the chat that also that calls the CPM levels an issue. But he asks that, are the CPM levels the same regardless of advertising category between gaming, e-gaming, sports, travel, etc.?
No, CPM levels are different per geo, per category, per ad format. You have, let's say, banners, you have video advertising. So we talk about a lot of different tariffs. But what we in general see is that all the CPMs in all the categories have come down. In certain categories a bit more, in others a bit less. But the overall, if you take an average, they're 20 to 30% down versus a year ago.
But if we talk about exposure, then the same viewer asks the following: What categories are you most exposed to currently?
Yeah, we're mostly in-app. Second largest is connected TV. There we do 70% in the US, which generally has a bit higher CPMs, also traditionally than Europe. We do roughly 16% in Europe, and the rest is APAC and LATAM. And within the, let's say, different formats, we're very strong on, on banners, but also on video. So those are, let's say, the main formats in it. And I think that's giving the main categories.
I thought we could also talk about the market some more. I thought you mentioned that there is currently a challenging climate right now, partly due to the macroeconomic situation. But despite that, you still write in the report that you managed to acquire market shares. And I'm curious how you managed that in such a challenging climate.
Yeah, we need to increase market share to be flat, basically, because otherwise we would go down on the revenues. And how do we get market shares? Just by adding customers, so getting new customers on board. There it helps, for example, that we are big on in-app, and people want to work with larger parties. We also have done a lot of product development, so also that helps with onboarding customers. So we do a lot on increasing the customer base, and by that also increasing the volumes.
And you mentioned a little bit that it's projected to grow long term. I was curious about if you could elaborate a little bit on the growth prospects for the advertising market.
Yeah, if you look at the overall market, advertising is projected by analysts to grow by roughly 6% year on year. Within that, there's a shift towards digital advertising, programmatic advertising, where the expectation is 10% per year. So we would be doing a very bad job in a normal market to not grow at least with 10%. We expect actually to grow more. Our, let's say, expected growth midterm is 25 to 30% per year. The macroeconomy has to come back. People need to start advertising again to get extra customers. By increasing prices, they have also started to lose revenues at a certain point. So we expect the market to come back. Also, if you look at the numbers and talk to our customers, people start to become more positive. From November onwards, we see really, there is more dynamics in the market. So we're positive on that, but it might also be that we still will have a more difficult Q1, Q2 next year, but it will change. And at the moment, prices for advertising, if demand goes up, prices go up. Prices go up, that of course helps us immediately on our cash streams and our revenues. And for the rest, we further continue to do what we're doing now, adding customers, developing products, improving our targeting. Targeting is super important, and that's maybe a thing to talk about. Identifiers that we use to target towards users, they are disappearing out of the market. Apple has disconnected its IDFA. Google is also working on that. Some browsers have already skipped the cookies. And that's a very interesting, disruption of the market. And that's something that we really are looking forward to do because we have invested a lot in contextual targeting, so targeting without identifiers. And we see already that helps us to grow on Apple, for example, Apple devices. And we expect to let us help us also in other devices in other areas. So we are looking very positively into the future. But it's about time that this negative macroeconomy is over and everybody starts looking and growing again.
And if we talk a little bit more on the long term and perhaps not only on the advertising market, where do you see further growth for MGI?
Yeah, we further expect to grow for in-app. In-app, we are strong, but in-app, if you look at it, there's a lot of time spent with apps. But there's still a much smaller percentage of the let's say advertising budgets going to apps. So we see a lot of potential in growing the revenues overall in the market on that. Then connected TV, there's a big shift from traditional linear TV towards connected TV. So that's a growth market where we grow. And then for the rest, it's really about feature development, geographic expansion. We're very strong in the US. We are okay strong in Europe, but we can further extend it. And we have teams in LATAM, in APAC, and also there is a lot of growth potential. So there's enough growth potential in the market to further bring this company forward.
Yeah. But what sort of challenges do you currently see? We've talked, of course, about the macroeconomic climate, and you said yourself there are some positive indications that growth will return. But challenges long term, what are they?
Yeah, we had some challenges in the past that are disappearing. Maybe to start with that, the personnel. I mean, the labor markets were super difficult. So that's something that has changed or is changing. It's easier to get people, especially on the technical side again. Then the disruption of identifiers. That's let's say a shift in the whole market, which we are looking forward to. AI is changing things. Look at what Microsoft is doing, which is generative AI. That's of course, also having implications for Google, which is very strong in search. So the question is, does the search page of Google still look the same in the future, or does it change? And is advertising budgets coming from search to other areas? So we will see a lot of shifts in the market. I mean, it's a digital market, and digital always is dynamic. And it's for us, it's important to play at the right time a role in there. New markets like virtual reality, for example, virtual reality games, advertising in there, in-game advertising. There's a lot of areas where there's potential, and it's about let's say also focus. You cannot do everything, but I think we're pretty well focused with in-app, CTV, and being multi-channel and really building our position there.
And how are you preparing yourselves for shifts in the market?
By analysis, so really doing, looking what's happening, what are the trends in the markets, but then also if trends are relevant for us, investing early. And for example, the identifiers going out of the market, we acquired a Beamray company in Finland, which has a lot of AI specialists, which was totally focused at contextual advertising. We acquired Dataseat and contextual DSP. And we invested a lot. So we hired people for that. We further were perfectioning our products on it. So it's a lot of, bringing the right things together. And sometimes you go a bit faster with M&A. M&A is not important for us at the moment because we can do a lot organically. But if there's big trends, it is sometimes a solution. But you need to invest in time.
I'll ask a final questions before I let the viewers ask theirs. At the beginning of this year, MGI moved from Malta to Sweden, but you have offices all around the world. But what is the current geographical strategy?
Yeah, we are a global company. We have over 25 offices worldwide. 70% of the revenues in the US. US is the biggest advertising market at all. It's also a lot easier than Europe because you don't have so many different languages. Basically, you have English and Spanish. And Europe is much more difficult, but it's also a smaller market. Asia, but there's a lot of advertising markets there. So I said global company, and the more volumes we get on our platform, the more efficient we get. And that's, I think, what we're working on at the moment.
Then I'll turn to the live chat then. So your cash reserves, there's some questions about that. What is the plans there?
Yeah, at end of Q3, over 100 million cash available. That's good. We also have bonds and debt. So in the end, we have net debt. The cash is, how to say it? We can use it in different ways. We can decrease, or let's say we can buy back bonds, by that pay less interest, and by that decrease our leverage. Or we can also use it for opportunities in the market. And at the moment, let's say we are looking at both. We're seeing how the market develops. And let's see how the next 2 quarters go, and then I can give more clarity on that. But I think at the moment, in a market which is still difficult to judge where it's moving, it's good to have a certain cash amount available to react to changes in the market overall.
There is some questions also about your debt and what is the plan there? And a follow-up question, perhaps, can we expect more bond buybacks in the near future?
Yeah, it's very connected to the cash, of course. We have roughly 400 million gross debt. If I take the 100 million off, it's a 300 million net debt. That's a leverage of a bit over 3. We have always said we want to have our leverage between 2 and 3. We also expect to be at 3 again, end of the year. We want to further delever. On the other hand, at the moment, share price is very low. To do equity raises, we wouldn't make our equity owners very happy. So in the end, the best way to delever is by generating more cash flows, which means becoming more profitable. That has to do with revenue increases, which is a bit difficult in this market, but which we expect to come again in the next quarters. And on the other hand, controlling costs. We did a 10 million cost program end of Q2. So that's important. All those things together allow us to further delever. And we need to see how the market goes. I think very important for us to be agile or be able to react to the market. If the market really would get worse, we can further cut costs. If the market gets better, we will put a bit more money into investments. And we have still 30 million of the 2024 bond outstanding. We have been buying it back slowly. We can call it, but we are still looking at, let's say, buying it back for good rates. And we have the 26 to 27 bonds. So the debt maturities are well diversified. We have an interest swap on the bonds. So also, let's say, with high interest rates, we were covered for roughly 2/3 of the bonds. So that's the thing that, let's say, it's pretty well spread. And let's see how the markets develop and react as a company to it.
Another question here. How come MGI hasn't already gotten traction from the cookieless solutions?
How come that? Sorry, can you repeat that? That was not.
How come that MGI hasn't already gotten traction from the cookieless solutions?
Oh, we have. We have got a lot of traction from the cookieless solutions. I think the market share of Apple, for example, in the US, where you see that we really have been gaining market share, that has a lot to do with contextual, because Apple is, let's say, working without or let's say, big part is working without identifiers. So there we see it. Also, a lot of our new customer generation, so where we get new customers onboarded, have to do with the contextual. So contextual is super important, and will become even more important. Google is also working on deprecating its cookies. They're working on something that's called Sandbox. So targeting is changing. Privacy is changing. We have moved from an opt-out environment to an opt-in environment. Google, Apple changing their policies. Also in the US, we expect more changes on that. So contextual is, we think, one of our big opportunities, but also something that we are already seeing good results at the moment.
We're nearing the end of the year. Could you tell us a little bit about what shareholders can expect from MGI during 2024?
Yeah, you can expect that we further will put all our energy on growing this company. We have a good base. We can grow from that. Onboarding new customers, improving our products. And what, of course, will make a big difference is how the macroeconomy works. Our company is going to spend more marketing budgets again, which they should at a certain point. And with that, we will see prices go up. So what went down, which is really a bit of pain, let's say the headwinds we have at the moment, might also very fast turn around in the other side. But even if it wouldn't, we expect to further really grow our market share and to improve our position.
Remco Westermann, CEO of Media and Games Invest, thank you very much for being here and answering our questions.
Thank you very much.